big conversation, great conversation yesterday about how to trade AI in this environment. And with so much going on in this market, you're going to see virtually everything being driven by this AI trade. Riot up this morning, 5.5%. Big move again on the back of, you know it, artificial intelligence. And that's what we're going to be digging into a little bit today. We've got some other things that I think are really important to cover. And today, it's not just about, moves like this that we've seen in recent days. Big move on Riot on the 24th, but continuing to climb, moving into the number 2 seat in this space over Mara. And I think it's very critical to continue to keep your eye here because, again, this is where momentum continues to build. If we look across the futures real quick, again, up to that 66.87 level, crude, Brent, everything else. But again, as we've said time and time again, it's about monetary expansion. Gold and silver, and a lot of people are buying into strength on gold, and we're going to explain that momentarily when we give you the runner at 9 o'clock. So good to see you, Rosario. Thanks, Lyndon, for joining us. Doc, Neil, Stewie, and Alex, great to see everybody this morning as we push into the final Friday of September, and that can and only will mean one thing: PCI inflation. PCI inflation in August. Well, we will dig into that because that will set the tone for the October trade, and we'll dig into what is happening with the SPY in a moment. Once again, as we note, you're here every day. 9:30 is when the market opens, and there has been a lot of positioning, obviously, around this PCE number, particularly as we look at CME Fed Watch. We pay very close attention to what the expected odds are for the next rate cut. The expected rate cut at 87% for October, and then looking into December, second rate cut up above 50%. So 50 basis points toward the end of the year. And despite that first rate cut that we had, obviously, couple of not too long ago in late mid-September, the key thing here is that the market, particularly in the financials, particularly in private credit, have been under pressure. So remember, some of these things become major sell the news events, despite the logical argument that, well, wait, shouldn't interest rates be beneficial for the regional banks because of all of the bonds that they own that could potentially go down in yield and ultimately raise the bond price and help provide them with capital if they need it? Yeah, that's the big level argument. But once again, we already saw so many banks running higher ahead of that report and ahead of that cut that it did become a sell the news, a little bit of a sell the news event. KRE regional banks still chopping around, paying very close attention to that this morning. But once again, we'll talk about where the smart money is moving this morning, whether this market is safe to trade or it's a trap day, and of course, our top stocks. Now, we are technically in a green environment, but I'm going to just tell you straight up right now, it really is as close to yellow equilibrium 50-50 as we can get. We're down into this breakdown territory, and I might as well just remind you right now that sometimes I forget to update things. Let's get rid of that. The reality is, from this morning, it actually looks a little bit different. It looks like this, and I will pull it up for you in 1 second. Come on, create the image. You can do it. There we go. SPY and the NASDAQ and the Russell. What does this mean? Well, the number of stocks that are in breakout territory compared to breakdown are basically in equilibrium. And what that means, again, on the intraday, is we saw a lot more pressure yesterday, particularly in the selling pressure. The number of stocks breaking out versus the number of stocks breaking down in our intraday rankings picked up. And now we are at -13 heading into today. And we're basically on a equal path for trailing 6 months when we're looking at these types of measurements. We're seeing strength in some names that we know. We're seeing continued strength in names like NVIDIA because it's NVIDIA, right? This is the top stock in all the market. This is why we did the conversation that we did yesterday. That's why you want to click the link above and learn about why you can basically just trade anything around this name in order to be successful. And again, as I've said, this AI movement is only 18 months in. We have a long way to go. But it's not just there. It's also found in names like DoorDash this morning, right? Stock continues to showcase its strength, bouncing off its 20-day moving average. Has just been a continued grind higher from that 240 level when we started the month, and continues to rebound heading into today's session. On the downside, the pressure remains on FCX, and this has been one of those stocks where now it becomes a question of, what am I willing to pay for it? And what am I willing to pay for it long term? Is it past the fundamental damage that it has just gone through? We're going to walk through this today at 3 o'clock. I look at negative momentum. When we move into a negative momentum environment, if we continue to slip, if we continue to sell off, if the FNGD breaks above these key moving averages, particularly the 50, so that's at $6 at the moment, then that becomes a space where we shift our entire philosophy into what is known as 6 rules for negative momentum. I will cover all of that today at 3 o'clock. That is a must-see event because the last time that we did this was back on March 1st when I first started here. And again, it's all about understanding patterns. And in the event that we have these short-term sell-offs or something significant, depending on the state of the global economy, then we are prepared for what comes next. All right. On top of that, the Russell is holding up pretty well. The names that are losers today, interestingly enough, are names like MARA, right? Mara Holdings had been experiencing quite a pullback in recent days from that 1849 level. We'll be paying very close attention to this, trying to get back above that 50-day moving average and trading back to that other, what is that? That's the 8. And then a couple of the financials. It's really built around just the way that liquidity is behaving right now. You're seeing stocks like Coinbase under pressure, Moderna under pressure, Block under pressure, and of course FCX under pressure, but equal strength. So again, we continue to see rotation into key names. The question is whether or not technology stocks will hold. Right now, the technology sector has a lot of breakout names, but it also has a lot of breakdown names, particularly at the Russell 2000 level. We'll continue to monitor that as the day and week next week progresses. Trump has announced new tariffs. Oh boy, here we go. One more thing to worry about as we are increasingly concerned about, well, a government shutdown and the redirection of bigger concerns around how this is going to work. We're basically building a giant wall around our country. And as I have said, 18th century mercantilism. Trump has unveiled aggressive new import duties impacting mainly the pharmaceutical sectors. And all of these names are under pressure as a result. Lilly, Pfizer, MRK, J&J. Where you are producing now is what matters. And we just did this with Intel. We just did this with Apple. So they're just moving from one place to the next. And it may be short-term pain for some of these stocks, but we'll be looking for the possibility of the government to get more involved in those specific industries. Tariffs on heavy trucks, Caterpillar, John Deere, CMI, right? All of this has a direct impact. And we've seen momentum breaking down a little bit on CMI. If you look at Deere, which is a fantastic company, very highly capital efficient, has been under pressure for the better part of the last couple of months. We'll see how this weighs on them as well. And of course, Caterpillar, which is just pure infrastructure. Very strong momentum continuing to move higher. And again, if you are domestic, you are going to be doing fine. In addition, watching the furniture and cabinet businesses, this one kind of came out of nowhere. We're just going to start hitting everybody on their kitchens. Okay. Well, Wayfair, obviously, very significant impact, Restoration Hardware, and Williams-Sonoma. So keep a close eye on this. This will probably pick up into next week. It'll get a little bit louder. and we'll be looking at momentum trades around key market averages. Again, paying close attention to how markets are wavering as we digest this latest trade issue. U.S. futures are mixed. Asian stocks were kind of chipping lower. Pharma's down in Asia, and the U.S. pharma is, it's resilient. But again, keep an eye on Lilly, Pfizer, and Merck, the Qs, and the SPY. And again, on the dollar side, the stronger dollar in recent days has been something weighing on the U.S. equity markets. Well, again, if we roll back over, that's going to be bullish for gold, bullish for silver, and of course, bullish for equities. Finally, number 3, OPEC supply shortfalls. This is this kind of came out of nowhere, to be honest, because again, they were supposed to increase production in September. Didn't happen, right? It were 500,000 barrels below their target, showcasing a tightening of supply. And obviously, this puts the energy traders in a little bit of a bind because, again, they have been positioning, a lot of people have been positioning for more production and the expectation of lower prices, but we just had drawdowns in U.S. inventories and now seeing this target missed. So oil is supported at multi-week highs. Exxon, Chevron, SLB, Halliburton, look for them to continue with their momentum. Energy sector strength versus inflation risk, obviously being a big story as well. Continue to watching the groups. This is why energy is up 3.5% this week. And I just continue to remind you that when it comes to the moves that we are seeing, you're seeing it around these key moving averages. They are breaking out. This broke out on the 23rd. That's Tuesday. Well, here we are, Friday, a couple of days later. This move above the 8-day moving average. And if you're short duration options and trading spreads, these can be very profitable and lucrative trades. Our next focus, however, on the XLE will be to see whether or not the RSI, which is the relative strength index, a price oscillator, and the money flow index, which is the money combination of price and strength, whether or not they both get to overbought levels. Because as we have seen, when we get to overbought levels, that is where we are seeing profit taking. And we can go back and look through these charts multiple times on the daily and see when we are escalated on both of these sides and when it's not related to a major geopolitical event, we see profit taking relatively quickly, and it becomes an opportunity to bet small on a contrarian play to the downside. All right. Good day, Secret Agent Charlie. Oh, my dogs are barking. Hash pipe. This has been using the 13th, not the 8th. Increased Ukraine attacks on Russian refineries. It's a macro issue, absolutely. But again, coming down to flows, really one of the core things. And INTC, people are asking about Intel Corporation continuing to rally. Look, in the foundry side of this, Intel was a screeching buy at $18, $16, $18, $20. But if you're trying to figure out how to trade around this, remember, you can either chase it or you can look to sell spreads to the downside and pick a price that you would be comfortable with owning for the long term. So back at the 26 level, maybe the 28 level. And don't be afraid to go out 3 months, 5 months, 6 months, and look for something that has a high probability of success, a potential return in the 18 to 20% level, and a high annualized return. That is part of the strategy that we will talk about today when it comes to the 6 rules for negative momentum. Spreads are a very critical part of that strategy and understanding oversold conditions during major market sell-offs, which again are predictable if you are following momentum and following liquidity and key moving averages. It is 9 o'clock. And that can only mean one thing. Just one. Secret Agent Charlie, what is it? You know. All right. Today, what am I trading? Let me get my pad out and let me write this stuff down because I need to enter it as the market opens and we get moving. All right. So futures are soft. Momentum's kind of choppy at the moment. capital's really kind of circling the energy and the metal space. Everything else in the stretch tech space is kind of taking a breather, but it still brings us Charter Communications, which has been trying to get off the ground forever. And we finally have some positive indicators built around the RSI pushing toward the 50 level, the MFI pushing above 50, crossover on the ADX, the negative bearish trend seeming to end, and then just kind of this sideways movement. What are we seeing? Well, again, all of this emphasis here continues to be built around a lot of other external things. And the question now becomes, what do I do with something like this? What do I do with something like CHTR? Well, again, I can stay at the money and sell calls. I can go long with calls at the money and sell shorter duration calendar spreads if I wanted to, right? Something that I'd be interested in holding it down here at the 260 level, 265 level, and then just continually selling calls for a period of time, hoping and looking for a breakout on this stock. CHTR, again, telecommunications, communication stocks are holding up at the moment. They are still broadly, they're effectively flat. Let's see, 17, oof, yeah, 11 to 10 on positive momentum on communications. But again, bottom feeder stock that has just taken it on the teeth. The other strategy is to look to the downside and just be willing and able to tackle a stock that is at a lower price. All right. What was looking for here? CHDR. Let's take a quick look here. No Viagra ad today. Sorry, Don. The 21st of November. I mean, way too wide on a spread, but let's see if we can find something. There's got to be something. There's always something, and you want to set a limit first. I have no problem just buying the stock and selling calls, but I'm going to have to let this options chain flow at around 9:30. Adding it to the watch list. I'll be back on this at 3 o'clock. It's just one of those names where I'm not seeing anything off the bat, and I don't want to waste 15 minutes trying to find something around it. HYMC. All right. So Highcroft Mining Corp. Yikes. What do you do? Well, once again, we're going to pay very close attention to what's going on the insiders. One moment. I have forgotten my insider buying password. How does that happen? I've legitimately forgotten that password. Okay. Don't worry about it. All right. Strength on the momentum side, continued strength on the gold side. And it's just one of these names that when you are assessing and looking at momentum, it's just about buying into that strength and staying right around these key moving averages. So again, insider, but I want to say that there has been buying on this from, let me see. One moment. Eric Sprott has been exercising warrants on HYMC, and Sprott and Boaz Weinstein continue to be buying gold into strength. So what do? Buy it and set a stop back at 580? It's just continued momentum. That's what we're looking for. Keep an eye on this MACD, but once again, strength is here. There's There's 725 on this stock. There's still meat on the bone. To the downside, ARM. This has been beaten up pretty gnarly from this chop. Same thing, looking for downside momentum at this time. And again, it's going to come down just to the state of affairs in the market, whether or not this can hold. But for this is pretty simplistic. This is right down the middle. I'm already short block, just so everybody knows. We are doing that in our Tesla mastermind room. But that's XYZ on the list. But right now with ARM going out to like the 19th, we sit here, again, high vol stock, 143, and writing the 137. So $4 of downside. That's a $300 trade. Looking for a 100% gain at a 48% return. Now, here's the thing. I want to point this out. If the stock pops back to that key moving average, right, that we've talked about right here, 143, here is your defined loss. 11%, 12%, 12%. You're keeping a tight stop here for the better part of next week. So never above 143, and your 20% downside is October 9th. So long as it remains at that lower level, you're now looking to make gains. If we get down into that 137 level, these are the projected gains over the duration of those 3 weeks. So ARM, 143 put, October 17th, the 137 put. I got to enter this stuff when we go. All right. Again, as we said, block. This is always a tough one because it bounces around so damn much. But again, same thing. Looking for a downside move, particularly 74 down to 71. Bought the 74, sold the 71. Out 3 weeks. Looking for continued movement, continued weakness in liquidity, continued downside over the next couple of days. Again, keeping a hard stop back at that 50-day moving average if the momentum continues to break down, and looking for the opportunities as the rest of the sector catches up. Energy, metals, and AI tech is where the momentum remains. As far as sectors go, breaking out utilities. That's why we watch the UTSL. Strength continuing. This is the leverage in that sector. When it breaks out, and everything that is linked to it does very well. Rotation has been sharper. Utilities are kind of the standout on the upside. Rotation into energy. Healthcare, consumer cyclicals, and communication services, again, are choppy at the moment. That's why I got to be very cautious about charter and rotating on energy. Other things to watch, MGA, Magna International, again, just strong momentum. And again, holding around that 8-day. Consumer cyclical name, but buying at the 46, back at that key moving average, that key level, selling to the upside and trying to basically take advantage of any particular move. Auto parts, very strong F score, very low gram number. Target of around $50 for this. Your stop, if you're buying the stock, is 1 times ATR. So that would be 40, 54, 45, 71. And look for a trade around that as it emerges. CRGY, remember, remains that very cheap name that we've talked about in the past. Again, private equity mixed with EMP. It has been consolidating around 10. It needs to break above that $10 level to follow through. Add it to your watch list. Add a signal if we get above that $10 level, looking for a move back to 12. If we break, we're back at that $9 level. So I prefer to wait for the 10 to the opportunity for the 10 to the 12, then speculate kind of in no man's land right now. Now, as always, the runner is your first move of the day, and this is exactly why we are here to look for opportunities and breakouts as they emerge. All right, we got 10 minutes left. I want to open it up to anybody if you have any questions or any thoughts. But What is your updated view on Moderna? You suggested it 2 days ago, got a big pullback since. Currently at the 20 MA support. Did you trade it? Would you pull out now at a loss? It was just in breakout territory. It came above this key moving average and it just broke down. So yeah, out into the short side now. Here, I did not trade that. I do not have a record on that. The runner. All right. But yes, we will continue to build a portfolio out of this and have trades that you can track and showcase all of them as we move deeper into October. Again, when setting stops back at these key moving averages, Moderna is a absolute mess. But when it breaks key levels, gets above these 3 moving averages, we've seen these breakouts, particularly on the short squeeze side. And we got above, and it just didn't hold. And that's why it's important to remain very, very diligent about stops. So we note a little bit of a preview of today. And I just want to remind you, we are in an environment where momentum and liquidity dominate everything. It's not going to be shocking in this environment to see this move of the 654 on the SPY, and the market just turns right back around and goes towards 680. And there's a reason for that, right? Because, again, liquidity remains ample, liquidity remains strong, and it's a reminder that you want to keep your eye on those top names at the top of the ladder because they're going to present the opportunities for more money flowing in at all times. And interestingly enough, one of the things that so many people continue to ignore is the basic fact that all of these top names, right? It's Friday. What happens on Friday? Payday. What also happens? Money starts to rotate into retirement accounts. And retirement accounts own a lot of this. So short term, looking for, can we stay above this moving average on the SPY? Can we pop back above that 8 and just keep burning higher? I've said you don't try to short until we get under that 20 and especially under that 50. For right now, Gianni might be right. It could have been a generational buying opportunity yesterday because we have lost our minds. But this is just how capital is flowing. And if we look at yesterday's price movement, particularly on the SPY, you saw something, again, that has become so incredibly common and so incredibly, in some ways deceptive, in that we sell off yesterday to start the day. We move into the third deviation. The market, everybody's saying there's something off. And then we rebound to start the day. Then we get another bit of selling pressure, and the SPX heading into 2 o'clock dumps. And this is typically where, when this selling starts, a lot of people who are trying to get short get really excited and try to short as well. And then all of a sudden, we just squeeze right back. And this is the reversion trade. If you understand this reversion trade, if you understand how algos are operating, and what Don and I were talking about yesterday is that, like, this is just algos fighting, just algos chopping around. It's only going to get more intense. This is not slowing down in any capacity. There's more money, more algos, more chopping around, more ETFs than ever. It's going to get more difficult. And it's why it's really important to be in the room with us every single day. We do 7.5 hours of live trading every single day. And on top of that, talking about the different strategies that different traders here can employ, different strategies that Blake is different than me. Brandon's different than me. Don's different than me. I probably am the most conservative person out of everything. But that's okay because, again, I have never, explicitly stated that this is 99.9% of what I do. So if you're more of a casual trader, you're somebody who wants to really understand and recognize how to simplify things and bring it down to one ticker, that's exactly what we're focusing on with the NVIDIA 4D. Understanding all the mechanisms and everything that comes with this market and having a variety of different ways that you can trade that meet your expectations, your risk levels, and setting you up for the most success. Because again, it's going to get more competitive, not against other people, but against the robots, right? Against the algos. And it's really important that you start by understanding these are the types of moves that are happening every single day. And if you take the time to learn them, they happen in the futures market. I mean, Tony's on top of this stuff every day. We hear it with Blake talking about monkey bars. We have Don talking about expected moves. I mean, all of this stuff is highly relevant to the way that all of this algorithmic market operates. So be cautious, but also don't be fearful, because you can actually master this stuff and see the patterns and recognize very quickly that there are ample ways to make money in a market that is driven by large institutional flows, driven by algorithmic trading, and you just have to be prepared to hit the bid button and buy when the opportunity comes. What do we invest in these algo trading environments? Well, there's a lot of different movements here, right? It's a good question. I continue to advocate for investing in things that and that's really what the next 32 months article, 36 months article was about. I'll put it in the chat. The reality is that we operate now in a world where the debt issue in America is not going to get solved, right? We're going to have to repress that debt. We're going to have the Fed buy more debt. And what that creates is these ample different strategies, right? So first, if the market has a spasm, a big liquidity bottom, and then we turn our attention to the central bank pumping into the system, what do we invest in? We invest in high beta right away. Every single time that there's a big financial event and they provide more capital to the system, you invest in high beta. That's the first side of every single momentum-driven environment. But I continue to advocate that you look at closed-end funds, you look at pipelines, you look at things that kick off a lot of cash that will appreciate both with inflation and will protect you from the reality that large sovereign wealth funds are putting their money into LNG funds or LNG systems. They're putting their money into large data centers. They're putting their money into things that extract cash. Well, you should do that too. You should invest in very similar things and then utilize that cash that is kicked off either monthly or every quarter in order to try to turn a 7% yield on something into a 50% return by trading it smartly and responsibly. Very simplistic. So gold miners, yep. Yeah, there he is. There's Jeffrey Bierman. All right. Ion Q. Cool. Brookfield was promoting the private market, 44 trillion retail capital with zero exposure to alternatives. I don't believe that. Okay. What else? Rise of the Machines. Do you have a link from yesterday? Link is at the top of the screen. So just click at the top. You're going to see everything that is offered in the NVIDIA 4D. The second selling pressure was market makers making sure the zero date holders closed positions and lost money. Sure feels like that. All right. I value. Okay. Good. All right. So once again, I will be finishing with two more sessions on Tesla 4D. We have one today at 1 o'clock. And then I'm going to be back at 3 o'clock. Again, the NVIDIA Mastermind will be on October 7th at 2 p.m. So again, click the link, check it out. Looking forward to everybody who is going to be attending that. And Don is going to be coming up. In about 10 minutes, we're going to dig into some trades. We're going to make some trades as well. I'm going to look at Charter, as I said, looking at ARM as well on a spread, and we will dig deeper from that. Again, it is Friday. Remember, every major liquid stock has an options chain today. So if you see an opportunity, a big sell-off, a move into that fourth deviation line, don't be afraid to trade whatever is at the money. Keep a tight stop and see if you get that reversal. We'll dig deeper into that later today. Secret Agent Charlie, no problem. Hope you have a good day. And I will be back in a little bit. Take care, everybody.